It's well known by now that Social Security's trust funds will run out in 2034, and probably sooner. At this point, only 80% of benefits will be payable. What if? What if you had bought gold instead of putting money into Social Security? We're not talking 401ks or IRAs. Just use the FICA withholdings from your paycheck that was taken out your entire working life to instead buy gold and rely on yourself rather than the government. Well, I've got 2 charts to show you that will blow your mind. Let's get into it. Using data from the Fed, I looked at the median personal income in the United States. And remember, this is not adjusted for inflation, which would be real income. I took this data and put it in a spreadsheet to run some what-if scenarios. Here's that spreadsheet. Taking each year from 1974 to 2021, I added in the average price for an ounce of gold for that year, along with the OASDI portion of the FICA withholdings. OASDI stands for Old Age, Survivor, and Disability Benefits. It does not include the Medicare portion, just your monthly entitlement check upon retiring. I was able to generate 2 charts from this data. The first one is median personal income in gold ounces. What this shows us is the effects of inflation. If you were to take your entire income each year, before taxes, how much gold could you buy with that? This chart answers that question. There are 3 epochs of interest, or epochs for my British-speaking friends. The first epoch is from 1974 to 1981. As you already know, Nixon took us off the gold standard in 1971, which resulted in gold prices skyrocketing from $35 an ounce to well over $800 an ounce during that time. Naturally, each year your income would be able to buy less and less gold, from about 45 ounces in 1974 to 20 ounces in 1981. The second epoch is from 1981 to 2001. Gold was in a funk for 20 years where it remained relatively stagnant the entire time, for various reasons such as a strong dollar and high interest rates. During that time, wage increases outpaced gold's ratio to the dollar, which would have made those tough times for stacking. Finally, after 2001 until today, the epoch we're living in now has gold outpacing wages. During this time, gold prices have increased on average about 7.5% per year. The median salary in 2001 would have bought 76 ounces of gold, whereas today you could barely buy 20 ounces, and it's getting worse. The trend line is down. Each year going forward, we can expect our income to buy less gold than the year before, until the trend changes, if ever. That's why it seems like gold is so stinking expensive, because it is. If this trend continues, how many years until we could only buy 10 ounces, or 5 ounces, or 1 ounce? This chart has got me rather alarmed. By the way, that dip in 2011 is because both gold and silver prices surged during the Great Financial Crisis. If that didn't freak you out, wait until you see the next chart. Social Security in gold value, US dollars. What if you had taken those Social Security withholdings during your entire working life and bought gold with it instead, and held it the entire time? How many dollars do you think you would have today? Or in 2021, where the data ends? Here you go. If you started working at 18 years old in 1974, you'd qualify for full retirement somewhere around 2022 or 2023. This graph represents your entire working life. If you had bought gold during that time equal to OASDI withholdings, you would have $389,000 worth of gold, where this chart ends in 2021. That calculation assumes an average gold price of $1,895 in 2021. That's 205 ounces of gold. It would be even more today in 2023, well above $400,000. Which would you rather have? Gold in the hand, or a promise to pay future entitlements from the government? Entitlements that are already broken. The Social Security COLA, or cost of living adjustment, doesn't keep up with real inflation. Everybody knows that. And now benefits have to be reduced in about 10 years, unless something is done to shore up Social Security. To address the 2034 shortfall, lawmakers may consider the following changes, as outlined by the American Academy of Actuaries report. These changes fall into two broad groups: tax increases and benefits reductions. Tax increases. Eliminate the taxable maximum so all earnings are taxed. Abolishing the taxable maximum would subject all earnings to Social Security taxes, currently only applied to income up to about $160,000. This change could increase contributions from high-income earners, but it would only cover 78% of the 2034 shortfall, necessitating additional measures. Imposing a payroll tax on earnings above $400,000 could address 55% of the shortfall. Extending the tax to 90% of all earnings could address 36% of the shortfall. Increase the payroll tax rate by 25%. Increasing the Social Security payroll tax rate from 6.2% to 7.75% for both workers and employees could generate sufficient funds to pay 100% of benefits in 2034. However, this measure might not be adequate to cover all benefits in subsequent years, and it could place an undue financial burden on low-income workers. Tax investment income, estates, gifts, and earnings such as carried interest. These areas have never been taxed with Social Security and may face resistance if taxed, according to the report. While changes could be implemented gradually, they would need to begin sooner to effectively address the 2034 shortfall. Benefit cuts. Reduce benefits for high-income individuals who have not yet claimed. Lawmakers could approach this in various ways, such as reducing the replacement rate for high-income individuals by gradually lowering it from 15% to 5% over 5 years. Alternatively, they could implement a means test to eliminate benefits for those with high incomes or assets. These proposals would have varying impacts on the 2034 shortfall. Did you catch that part? Means testing involves adjusting benefits based on a beneficiary's income or assets. That's right. If you've worked hard all your life and saved and put away money in the bank, treasuries, a 401k or IRA, vehicles, real estate, rental property, or a boat, those assets could potentially be used to eliminate your Social Security benefits. Gradually raise the full retirement age. The full retirement age marks the point at which beneficiaries receive 100% of their earned benefits. This age is currently increasing to 67, following changes implemented in 1983. To account for longer life expectancies and extended careers, lawmakers may consider further raising the full retirement age. This could involve gradually increasing the age by 1 month every 2 years, or by 2 months per year for 12 years. These changes could potentially address 3 to 10% of the 2034 shortfall, respectively, if implemented properly. Reduce the annual cost of living adjustment. The measure for Social Security's annual cost of living adjustment may be changed to the Chained Consumer Price Index, which would reduce benefit increases by about 0.3 percentage points each year. That change would cover 13% of the 2034 shortfall, according to the American Academy of Actuaries. In comparison, another proposal to change the COLA measure to the Consumer Price Index for the elderly, or CPIE, would increase the annual benefit adjustments by 0.2 percentage points on average. Meanwhile, costs would increase by about 8% of the 2034 shortfall with that change, the report found. Moreover, addressing the shortfall for that 2034 date may not fix the program forever. What to do? I don't know about you, but I'd rather have gold in my hand. It's fun to play what-ifs like this, but it's never going to happen. We'll always be obliged to pay into Social Security. But there is one benefit from this little diversion from reality, and that's the importance of building our stack for retirement, taking the long-term, dollar-cost averaging approach of gradually increasing our gold or silver holdings. One word of caution. This is not a call to take your money out of the bank, 401k, or any other type of savings and go buy gold. That's out of balance. We never advocate that here. We advocate long-term accumulation of gold to safeguard our future. Our mantra is keep on stacking. That's all I got for you today. Stay safe out there, and we'll see you next time.